right, ladies and gentlemen, welcome to Relative Strength Abroad, a technical update on China. The COVID-19 virus has led to significant changes to the global equity landscape thus far through 2020, with some areas faring far worse than others. This has made it increasingly important that investors maintain an objective view when evaluating opportunities amid the uncertainty around the world. Saunders, analyst at Nasdaq Dorsey Wright, will discuss how recent price movement within Chinese equities has led the country to demonstrate strength when compared to other international equity markets. Ian, thanks so much for joining us.
Perfect, and thank you very much for having me. So in order to wrap things up here this afternoon, and thank you very much for everyone for joining here as well, we're going to be taking a look for this final presentation at a technical update on China through the lens of point and figure charting and relative strength. So point and figure charting at its core is looking at the objective relationship between supply and demand in the price movement of a security. And the great thing about this objective relationship is that it can look across the price of any security, right? Whether that price is going to be here in the United States or abroad in areas such as China. Tom Dorsey, the founder of Dorsey Wright back in 1987, who literally also wrote the book on point and figure charting, as you can see here, has displayed this relationship, how it can move abroad by having this book translated into other languages and published in other countries, and countries such as China will likely see here as well. So in order to understand the relationship of point and figure charting and relative strength in China, we want to make sure we have a solid basis on point and figure charting. So for a brief overview here, we have the point and figure chart of Microsoft. And the point and figure charting at its core is meant to take the noise out of the price movement of a security by just identifying those price movements that are pertinent enough to display that relationship of either demand or supply. So we display demand in the price movement through a column of X's, indicating that price of the security is going to be rising. So when you're looking at this chart here, you see on the right-hand side, on the y-axis there, we have numbers indicating the price there of Microsoft. And as the X's move up, it's indicating that demand is in control and taking the price of Microsoft higher. On the flip side, O's indicate that price is going to be falling. So we always have alternating columns of X's and O's, never X's and O's in the same column. And we use what we call a three-box reversal method, which simply means a minimum of 3 X's or 3 O's in a column. So there's a variety of other kind of intricacies with point and figure charting, but for the sake of time today, we really want to focus on 2 particular aspects of a point and figure chart. One, what column are we in, right? Are we in demand taking the price higher in a column of X's, or supply taking the price lower in a column of O's? That's going to be your kind of near-term indication of supply or demand. You can also see on this example, the point and figure chart, that we have some green highlighted X's and some red highlighted O's. And that's going to be what we refer to as buy signals or sell signals. So every time you see a buy signal doesn't necessarily mean you want to hit the buy button. On the flip side, every time you see a sell signal doesn't necessarily mean that you want to hit the sell button, but it's used more of an indicator of strength. So in order to generate a buy signal, it's going to be anytime a column of X's moves above its previous column of X's. And anytime you have a sell signal, or that red O, it's going to be anytime a column of O's moves beneath its previous column of O's. And so when we're looking at the chart here, we can see that it's not necessarily dependent upon time. We do have time represented on this chart. The years are going to be represented by the vertical gray lines that you see there with the 19 and the 20 at the bottom. So anything in the column that you have the 19 there and then to the right, that's going to be price movement for 2019 until you get to the next vertical gray line that's with 20 at the bottom. And that's going to be the price movement for 2020. Then we can see here that there's been significantly more kind of pertinent price movement over the past 3 months than there was in all of 2019 as a whole. And so when we're looking at point and figure charting, there's 2 kind of aspects that we can come to. There's trend charting, which we just looked at there with Microsoft. And then we also have relative strength analysis. Relative strength analysis is simply going to be, instead of taking the price movement of one individual security and viewing how strong or weak is the security based upon its individual price movement, what if we compare that price movement to another security to see which one has been either outperforming or underperforming? In order to do that, we generate what we call a relative strength calculation. This calculation is simply taking the price of investment A, divided by the price of another security of investment B, which gives us a reading. We then multiply that reading by 100, simply to move the decimal place over, which gives us what we call the relative strength calculation there. So as you can imagine there, just in viewing that division, as the price of investment A moves higher, obviously that reading is going to increase. And if the price of B is rising faster than investment A, then obviously that reading is going to fall. So taking a look at the individual daily calculation of the relative strength of securities isn't necessarily going to be all that helpful. But when it is helpful is when we're able to chart that movement on a point and figure chart. So we can chart, again, any relationships there on a point and figure chart. Look at the relationship of any two names on a relative strength basis. So here we're looking at domestic stocks against bonds, right? This is the S&P 500 index against the Barclays aggregate bond, AGG. You can see there, the chart looks pretty much the same as the Microsoft one that we were looking at just a second ago. We have column of X's moving higher, columns of O's moving lower. Buy signals and sell signals are going to look the same as well. Buy signals, again, column of X's moving above its previous column of X's, and sell signals, column of O's falling beneath its previous column of O's. And so those two same points that we were looking at, what column are we in and what signal are we on, are the same things that we're going to be looking at on a relative strength chart, but they're going to function on much longer time horizons. As you can imagine, when we're looking at the relative price movement between two securities, it's going to take a lot more movement in those prices in order to generate a change on the chart. So when we're looking at those two things, right, column and signal, that signal is going to indicate that longer term indication of relative strength. And that's really what we're trying to capture through most of our analysis here at Dorsey Wright. You can see here on the example of the S&P against the ag, when we get a chart signal change, it typically leads to consecutive signal changes. Your sell signals are typically followed by consecutive sell signals, and your buy signals are often followed by consecutive buy signals. So one way to capitalize on that movement is what we call an RF switching strategy. So you can see here in the table on the right, this is simply looking at what we're going to be buying the security that is on a buy signal. On this particular chart, so SPX against AGG. Whenever the S&P is on a buy signal, we're going to hold the S&P. Whenever it moves to a sell signal, we're going to hold bonds. We're going to hold the ag. You can see from that performance flipping back and forth, this typically does work out pretty well. We have from 2000 to 2003, we were going to be holding on to AGG there, and we had stocks down 25% versus the ag up 23%. And from 2003 to 2008, holding on to the S&P, we have outperformance from stocks relative to bonds. And this continues typically, but as we know with most strategies, with most objective, with most rules-based strategies, they're not going to be right 100% of the time. But the important thing here with point figure charting with relative strength is that when it's wrong, as we can see here through the example in 2016, it did move to a sell signal in February of 2016. And we can see there that the S&P did return 18% over the time it was on a sell signal, while we were the hypothetical strategy here would have been invested in bonds. It was down a little bit, about even there. But the important thing is it doesn't stay wrong for long, right? We saw that change reverse back there in November and then continued higher from there. So if we're looking at simply buying and holding the S&P or buying and holding the ag, we can see that using this RS switching strategy offers a broad outperformance over both of them over the time frame, with the S&P up just over 95% from November of 2000 through Tuesday, and the ag up 43% over the same time frame. But if you use the switching strategy throughout that time frame, you're going to be up 226%. So even though it's not going to be right 100% of the time, we do see here that ability to tactically move, to switch signals to correct itself in a swift fashion does generate that alpha there over the time frame. So we have relative strength there from stocks against bonds. But another way that we have the ability to apply relative strength here is through what we call the DALI tool. That stands for Dynamic Asset Level Investing. This is going to be a tool that we use to rank the 6 broad asset classes that you see here: U.S. equities, international equities, commodities, fixed income, cash, and currencies amongst one another. So instead of comparing just 2 individual things on a relative strength chart, we're comparing, creating an inventory of names in each of these asset classes and stacking up each of those names against one another on individual relative strength charts. Now, you can think of it almost as like an arm wrestling match. And in order to win that arm wrestling match, the security would need to be on a buy signal against the other name. So step 2 here, we see that relative strength analysis. We are simply there adding up the number of times that each security within each asset class is on a buy signal to give us what we call a tally score. And that allows us to rank the asset classes among one another. So this is looking at multiple different comparisons on a relative strength basis. But again, each asset class is going to have equal representation, comparing each name against every other name to see, okay, which asset class comes out on top the most, right? Throughout the vast majority of the last decade, that asset class was U.S. equities. But we've seen that relative strength relationship change a little bit here recently. And in order to view some of the recent developments that we've had, we have a ranking here of those 6 broad asset classes, those same asset classes. And the numbers that you see there on the screen are going to be the respective buy signals that each asset class has. So as you can see down at the bottom of this particular image, domestic equities was going to be the top ranked asset class at 333 buy signals, followed just behind it by international equities with 223. So even though domestic equities had maintained that #1 position for the vast majority of the past 10 years, the international equities asset class had been pretty close behind it throughout much of that time frame. But we've seen that relative strength shift a little bit over the past few weeks here on the backs of this global concern around the coronavirus, which has led the international equities asset class to fall significantly in our Dolly rankings. We can see it fell from 2nd all the way to the 6th ranked position currently where it sits here today. And if we look at a particular point there on March 9th, you can see the international equities lost 63 buy signals, which happens to be the largest single day decline for any asset class that we have going back through the history of the Dolly tool, which goes back to 2005 there. So what this indicates is a broad underperformance of international equities as a whole, right? We see that it has fallen from 2nd to 6th, and it's still 6th, or sits at the 6th ranked position here currently. But just because the broad asset class has fallen off in strength significantly doesn't mean there aren't going to be areas within international equities that still might indicate some strength. One way that we have to identify a further breakdown of names within a particular asset class is through a page that we call the asset class group score rankings that we have. The point that you want to focus on here on this particular image is going to be that average score column that you see in the middle. So the asset class group scores page that we have takes 135 different asset classes, which is meant to represent your kind of full investable universe, everything from individual domestic equity sectors to individual country exposure, as you can see here, size and style breakdowns, so pretty much everything you could potentially invest in around the world. We take all those ETFs and mutual funds and classify them into at least one of those 135 different groups. And then we are averaging the scores of those funds. We have a fund score here in the system that goes from 0 to 6, 0 being the worst and 6 being the best. And so on the group scores page, we're taking each of those classifications, taking the funds that we would classify in each group and averaging their fund scores together to see, okay, how strong is this group as a whole from 0 to 6, 0 being the worst and 6 being the best. Here we're looking only at those non-US asset classes, with a few US and kind of static representatives that are maintained on the page as well in order to offer some perspective on where things sit. So we can see here that when international equities fell off in the Dolly tool, it also led most of the international groups that we have on the asset class group score system down at a very low field position. You can see Middle East Africa equity down at 135, Latin America, India just behind it. Those bottom 3 ranked areas, all international countries, or countries or regions. So very kind of broad weakness across most of the international equities picture. And then you have China. This is sitting up towards the top, just beneath your kind of core US equity market, as the highest ranked non-US equity group, kind of a diamond in the rough amongst its peers there. We can also see that Chinese equities, as identified there by that group, are beating some of the individual US representatives that we have. The broadest US representative we have in the ranking is the all US equity diversified. And we see that Chinese equities are 0.3 points from a score perspective better, which is a significant kind of demonstration of strength over the recent time frame here. We can also see, in looking at some of the individual indicators that we have here on the chart or on the website, such as the bullish percent charts. Our bullish percent indicators are going to identify, okay, if we take all of those funds that we classify as China funds that we put into that China group that was ranked up towards the top there, what percentage of those funds are going to be on a point and figure buy signal? What just on its normal individual trend chart, how many are on a buy signal right now? And what this is meant to indicate is how many funds are participating in that upwards movement, how many funds are participating in that strength that's holding up the broader Chinese equity space. And we can see that throughout the course of the end of January, kind of early February there, on this particular bullish percent chart, the chart did reverse down from 96%. So 96% of Chinese funds that we have here were on a buy signal, did move significantly lower, all the way down to 2%. So it did indicate some weakness there right towards the beginning of the year. But what we've seen over the last few weeks is this indicator did reverse higher, reversed up off of that low at 2%, to currently sit at 28% of funds on our system, Chinese equity funds in our system on that current point and figure buy signal. So more and more funds are showing are adding to that positive movement that we've seen from Chinese equities that's holding that group up higher. Another pretty powerful picture that we have is an indicator, the RS positive for China. What this is looking at is comparing each of those Chinese equity funds against the United States, actually, against a broad U.S. representative on an individual relative strength chart, such as the one we're looking at for the broader U.S. stock market against bonds. We stack each China fund up against the broader U.S. market to see, okay, what percentage of those funds are demonstrating a buy signal on a relative strength basis against the broader U.S. space. Then a pretty interesting image here that we see 82% of Chinese funds are demonstrating that relative strength buy signal against the broader U.S. market. That indicator bottom off there at 34, right there in February, reversed higher right at the end of February, and has continued higher throughout most of March, moving all the way up from that 34% all the way up to 82% where we sit here currently, which is also going to be a multi-year high. We can see that we haven't been at these levels for Chinese equities since all the way back in 2010. So pretty broad outperformance from the Chinese equity space as a whole, as we've seen over the past few weeks here. So we want to take a look at a couple of individual relative strength relationships within China. These are two charts that we have here that show how A shares have really been leading the pack. So we have the Crane shares, China A ETF here, KBA, on the left-hand side, compared against a broader emerging markets representative, EEM. Then again, we're looking at the same two things. What signal are we on and what column are we in? We can see that that column did reverse down in February. We reversed higher at the end of February there, and moved back to a relative strength buy signal right in that last week of February, and has continued higher here over the past month, demonstrating that broader outperformance over the emerging market space. And we've seen a very similar picture over the broader international space as well, through the KBA against the ACWX, broader all-country ex-US fund there. Very similar picture. We see moving lower there in February, reversing higher at the end of February, giving that relative strength buy signal there, I believe, on February 27th, and continuing to demonstrate that outperformance over the past several weeks, leading to its current position there. Very kind of high column of X's. Both the longer term buy signals is going to be positive, and the near term in a column of X's demonstrating that positive movement there as well. So in addition to identifying kind of the strength of China against the broader international space, we partnered here with Crane Shares on to bring a model out there on the platform that looks at, okay, let's identify strength within China. Let's look at some individual RS or relationships within Chinese equities and how these compare to a broader Chinese fixed income representative, KCNY. So just a brief overview of the workings of that particular model. Looking at 7 Chinese equity focused representatives that we have there on the left, comparing each of those funds against the China fixed income representative, China commercial paper fund, KCNY, on an individual relative strength chart. And the model is going to hold those funds that are on a buy signal against Chinese fixed income. We can see here on the right, these are the current areas that have demonstrated strength relative to the kind of static, the China commercial paper fund there. As Brendan mentioned earlier in his presentation, we've seen some strength recently within the healthcare space within China, and also within the healthcare space in emerging markets on the backs of this coronavirus kind of global pandemic. And we've seen that reflected in the model as well. The model, it does currently have exposure to KURE and KMED, in addition to the two kind of broader China-focused funds, KVA and KALL. So this model is something that is available there on our research platform. If you have any kind of further questions or anything around that as well, I'll be more than happy to answer those, or you're always more than welcome to sign up for a free trial on the platform there as well through dorseyright.com/trial. So with that, that will wrap up most of the coverage here today. Looking again at continued broad outperformance that we see from Chinese equities, we continue to see that group maintain its strength relative to the rest of the international space from both a relative strength perspective and an absolute perspective on those individual trend charts. And then I'll go to the most important page slide here, as told by my compliance department. There are a few disclosures there as well. But with that, we can go ahead and open it up for questions there if anyone has any.
Hi, Ian. Thank you so much for that presentation.